G'day folks, welcome back to Pete's Investing. It's the 23rd of May 2024. This is the natural gas, oil, UNG and KOLD ETF update. As you can see there, nat gas, oil and UNG have all risen consistently since our last video, and KOLD has dropped. This is the heat map showing the various trends using the CCI 150, and on the top right there's our indicators for the gas, natural gas and ETFs. You can see there predominantly it's neutral on the monthly, but on the weekly and daily it's predominantly bullish with the exception of KOLD, and plus some of our other instruments we cover occasionally. Now we're going to go through each of these videos. We do cover some trading examples and how to enter a trade using the CCI 150. And the first rule is you must trade on the larger time frame. So if you're trading on the daily, then you must trade on the direction of the weekly, or alternatively if you're trading on the 1 hour, for example, or the intraday, you must, at the minimum, you must trade on the direction of the daily. Step 2 is you look at the direction of the CCI 150 and look for a fresh breakout from the CCI moving averages to enter the trade. And step 3, to close a trade, look for the CCI 150 to move into the moving average range. So first, looking at natural gas on the monthly, weekly and daily trends, we look at the monthly first off. You can see it's neutral. The CCI 150 is broken into that moving average band, so giving us a neutral positioning. When it's above the moving average band, it's giving us a bullish signal on the weekly, and on the daily likewise it's bullish. Now you will notice we did have a resistance here at 28.74 on our last video, and it's actually broken through that. That's a continuation, and our next level of resistance is at 31.20. So we're going to remove that resistance and then go to the hourly chart with the daily chart here as a reference. So again, to trade on the hourly, we take predominantly bullish trades. So we're going to turn on our indicators showing bullish movement. So you can see there going back to around the 17th of March. Let's go back to the 17th of March. That's around there. Let me just delete that Fibonacci. You would have taken your first trade there during that little uptick and closed it out. It's a bit hard to read there, but you would have closed it out. I've got X's marking where it's closed, and you would have made 47 points there. You don't trade when the CCI is dropping. You can see there it's below the moving average band, and it's also below this moving averages on the price chart as well. And you take the next long trade when both the price is broken above the moving averages, but also the CCI. And that would have, actually you would have got lost on that one. That would have been a minus 45 trade. This one gained 18 points and so on. So again, only taking long trades when both the CCI and the moving averages of the price chart are in position. That would have been a nice little trade at 283 points. That one lost somewhat, and that one also lost. So again, not all of these are winners. You can see there another 342 there, 55 there, etc. So at the moment, on the daily, it's in a neutral positioning. So just be careful about going. Well, actually, no, it's still bullish. Actually, still above the price chart, and the CCI are still trending high. But just notice the CCI on the 1 hour chart is actually dropping off. We've got a bearish divergence. So that's between that, those highs are lower versus, going back to that point, higher highs on the price. Now we did have another bearish divergence here, longer term, and we marked the target there. We're probably going to leave that there for the time being, but at the moment, that's a longer term bearish divergence. And we do look at some shorter term time divergence as well when they happen. Next, we look at BOIL ETF. On the monthly, there's no CCI, so we'll call that a neutral positioning, but it looks like it's probably bearish. On the weekly, we do have a bullish divergence on the CCI 150 versus lower lows on the price, and that's still making further progress to the upside. On the daily, likewise bullish movement, bullish divergence on the CCI versus lower lows, and it's actually bounced off that 1346 and still making new highs on the daily chart. If we jump to the hourly chart here, again we're taking predominantly long trades on the daily, based on the daily trend. I've got that bullish divergence, that's still moving higher as I said. So we take long trades only. So again, I've got the long program here activated, and that was a little bearish divergence, which it hit the target. So I'll remove that Fibonacci. And let me just get rid of that one and clean it up a bit. And this would have been a long trade there. Now this wouldn't still be in the trade going long, because our exit criteria is when on the price chart, when the CCI moving averages starts turning down like it did back here. You can actually put in your own exit strategy, but I'm just using the multiple moving average whenever it turns down. So at the moment you would have gone long there, and that's still in the trade for this one. But do notice there is a bearish divergence, both short term, that was that little bearish divergence there, but also if you took it from that point to here, that's probably a longer term bearish divergence. But even if you want to take the short term ones, let's look at from there to there, that's a bearish movement versus the same period on the price chart. You can see there it's bullish on the price and bearish on the CCI. So there is some bearish divergence happening in that current area. Next we look at KOLD. Now on the monthly it's showing no CCI, or it's just starting to. So call it neutral. On the weekly it's broken down into a bearish trend. It's below the moving averages of the CCI. So it's giving us a bearish signal. And on the daily it's been bearish for some time. You can see that the CCI is still dropping off along with the price. But we do have this support at 38.75, so that may still bounce from there. We'll keep an eye on it in the coming days. If we go to the hourly chart with that daily as a reference, again taking only short positions because of this trend below the moving averages on the CCI. I've got the short positioning happening, and it's a bit hard to read there, but that was the last entry made, and that would have been a continuous drop in the price. Again, you can see there the CCI, sorry, the moving averages of the price chart haven't turned up. So in this case, you would have entered short there, and you'd still be in a trade. Now, you can actually use the bullish divergence to potentially get out of the trade if you're happy with your profits, but that's just a couple of entry approaches to take. And we're going to remove that Fibonacci because that bearish trend is still declining. And you can see there it hasn't really bounced yet to call it a bounce, but that is a bullish divergence versus the price chart. And then we've got UNG on the monthly. It's still bearish, although notice the CCI is coming towards the moving averages, so it could go into neutral in the coming days or next week possibly. On the weekly, we've got a bullish divergence on the CCI versus the lower lows on the price, and that's made a bit of a bounce. And on the daily, we've also got a bullish divergence versus the price, and that's made a bounce obviously. And if we drew a Fibonacci up to that point there, you can see there it's now resting just short of this 38% Fibonacci retracement level. So further upside to go on that one, possibly. Going to the hourly chart, again taking long trades only, no short trades because of the daily is in a bullish movement. Our last entry would have been back here. That would have been a long position, and that's still in the trade. So that would have been a nice little gain if you were into that. But notice again, we've got a bearish divergence, and I like to use this as a potential exit point. So there's a couple of ways you could exit, obviously. Exit when you see a bearish divergence in this case, or let the price rise, let the price go, and just make sure using the fairly tight exit strategy possibly. So you could have actually used the exponential moving average 9, which is that pink line, to exit, or in this case I'm using the multiple moving averages when they turn down. That came close to turning down there, but it went sideways and went up again. So that gives you a bit more leverage to keep going in that direction if it's still trending in that direction. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.